today's session. Today's session is called the SMSF Paperwork and Management Q&A educational session. So what today is it's a little bit more advanced than the basic SMSF introduction one. What I'm going to go through is when you set up an SMSF, what happens next after you lodge the order, what happens to the order form, how we process it, things we do, how we set it up, how you sign the paperwork when the paperwork comes, can be quite daunting. And then at the end, I'm going to go through some basics on technical aspects of an SMSF, contributions, pensions, etc. So I'll kick right along. I won't spend too much time on myself. I think most of you on this one will probably know who I am, but I am an accountant, mortgage broker, real estate agent, justice of peace. I was a financial planner, but I quit that during the pandemic. This just disclaimer, as always, you see on these, this is just general information I'm going to give you. If you have any further questions, please do seek professional advice, probably from myself. Okay, so once you've ordered an SMSF, what are the next steps? Firstly, just allow 2 weeks in between each contact because there are a lot of things happening in the background and it takes us about 2 weeks to do each step. So emailing and calling us actually doesn't speed up the process. In fact, it slows us down. At one stage last year, we were dealing with 10 orders a day, and then if those 10 people a day are calling us every day to find out where it goes, we're actually just doing nothing but answering the phone. Better just to leave us alone and let us do our job. Do contact us if you haven't heard from us in 2 weeks between each step. Once you fill in the order form, the next thing you'll receive is a set of what we call establishment documents. That is the SMSF Trust deed and a whole lot of other information. We're going to look at the commonly asked questions that we get at this stage. So that might help some of you understand what the documents are about. So firstly, it's important to know who's who. Some of the very basics things you need to know about an SMSF is who in the documents, because there will be references to these people. So the trustee, in most of our cases, is the company that we've set up for you. It could also be personal trustees if you've chosen a personal trustee. The trust is the self-managed super fund itself. Director, if you've got the company trustee, all members must be a director of the company unless they're under 18. The secretary, people ask us what that is. It's a really old-fashioned position. It's largely irrelevant. We just need to pick somebody to be a secretary. It doesn't actually mean anything in reality. The member is you. And the beneficiary is who you choose to leave your super to when you pass on. Putting that in a diagram, this is my super fund, for example. Smith Super Proprietary Limited is my company. That's as trustee for the Smith Family Super Fund, which is the SMSF. Then I'm a member of it along with my kids. And then all members are directors of the company. If you ever ask for the full legal name of your SMSF, which is particularly important for things like opening a bank account, opening an account with the gold dealers, buying property, the full legal name is the whole lot. Smith Super Proprietary Limited as trustee for Smith Family Super Fund. It's a mouthful. The ATF is as trustee for. On most documents, you can get away with writing ATF. In some cases, you'll be told to write the full name as trustee for. If that's the case, just do as instructed. All right, as part of the establishment documents, there is an important document you receive called a nomination of beneficiaries. You might have seen this in your previous super funds. Basically, it's just who you want your super to go to in the event of your death. So who should be on that table? Usually it's your partner. I shouldn't take that for granted because I have had a very awkward situation where I said that in front of a couple and they looked at each other and shook their head. But usually it's a partner, or it might be the children. Some people in split families might be leaving it to their adult children rather than their partner, or it might be partner and the children in different percentages. So then there's a nomination table 2. Who should be on that? The most common scenario we see is partner on table 1, children on table 2. So that is, the partner gets it first, then if the partner's not around, the children will get it. That's the most common, but basically on table 2 is just whoever you want to get it if everyone on table 1 is gone. So on that binding death nomination, it's really important. There are 2 spots for witnesses. It's a legal document, just like a will. It does need 2 witnesses to sign that. They do not need to be a justice of peace or a solicitor or anything like that, just 2 adult witnesses. They also need to be what we call disinterested witness. That's an interesting term that we get questioned on. You think they'd just say something more self-explanatory, like not a relation, not a relative. But what disinterested means is it's a witness that wouldn't have any sort of conflict of interest. They wouldn't benefit from the SMSF, and they're not a beneficiary of your will. So preferably not a relative either, because they could be somehow interested in your estate. So completely independent adults, someone at your work, your school, wherever, just not relatives. What if your circumstances change? That's absolutely fine. Those nominations just stay in our internal paperwork. They can be ripped up and redone at any time if your circumstances change. There's a couple of questions on the document about whether it's to be binding. We suggest yes. I don't know why they even asked this question. Why would you bother doing it if you don't want it binding? But I think the point of the question is to make sure that you are definitely saying it's binding so that nobody can say that it's not binding. A bit of twisted logic there. Also, they ask whether it should be lapsing or non-lapsing. Once again, we suggest non-lapsing. Why would you want to do it? Just to have it lapse. If you don't tick non-lapsing, it will lapse every 3 years and you'll have to remember to redo it. So what about your will? So binding death nomination in superannuation, it's really important to understand that only covers your super. All of your other assets need to be covered by your will. If you have a complex family situation and you would prefer your super to go straight to your will, you can not fill in those tables and just write the words legal personal representative for my deceased estate. What that means in a nutshell is that the super will be wrapped up, the SMSF will be wound down, and the money will go to your executor, and then it will get left as per your will. So that's common in complex family situations where you might have all sorts of blended family issues and you've got a really specific type of estate that you want to leave to lots of different people in different percentages. So, but the main benefit of having the binding death nomination and why we do it as part of the setup paperwork is that it can be really beneficial because it's binding. It cannot be challenged. So a will can be challenged, and I'm sure everybody's heard the stories of a will and an estate being challenged and being wrapped up in courts for years. 10 years I've heard, really complicated ones. So the binding death nomination cannot be challenged by anybody. So if you've got any concerns about it, about your estate being challenged, use the binding death nomination to avoid that for your super. It also can mean that we can get the money out reasonably quickly. The estate, if you've got the executor, it goes through probate. There's a really long process for your estate. It can take a year, even in a really simple case. Whereas with the binding death nomination, it's quite easy for the accounting team to work out your balance and pay it out to your beneficiaries quite quickly. So just on wills and death and all those nasty things, do you need a will? I say everyone who has any assets at all, more than just a car or something, you should have a will, because otherwise the government takes control of your assets, takes years to distribute and gouges a huge amount of fees. So definitely have a will. We can do one for you if you need. We have a service with a template with a solicitor that we can draft it up for you, quite cost effective, certainly a lot cheaper than going to your local solicitors. So more on the establishment paperwork, there's also another document called an authority to access form. That allows us to talk to your existing super fund. We list a lot of people on that form, and that is because we have, 3, we've even got more SMSF admin accountants now. So we just basically list them all so that whoever picks up your file can make that call. At the moment, we've got 2 people on full time, just ringing the super funds all day, every day to try and speed up the rollovers. So that's why there's so many people on that form. We can't do anything with the money in your previous super fund. We can only ring them and ask questions like, where's the rollover up to, and things like that. If you've got those documents and you don't have access to a scanner to scan it back, people have asked, can we take photos of each individual signed page? Yes, you can. It's not preferred, but you can. But do make sure they're a really clear, high resolution photo. It's strange to say, but square to the borders. We have had photos of on all sorts of angles, because we need to piece all that back together into the trust document. It's going to look really funny if there's all sorts of crazy angles, or just post it. Australia Post are a bit slow at the moment. It'll cause a 3 to 4 day delay, but that might be your easiest option. Do you need to print out the entire document? No, you don't. The staff send you in an email all of the documents, so you've got a record, but then they just send you a separate folder with the documents, establishment pages to be signed. Just print those ones. It's not nowhere near as many as the 100 you'll receive in the other packet. Sign it using a real pen. I'll mention now because we had an issue this week. A real pen, as in a black or white pen, which is what you use on legal documents. Please don't use the purple or red. Scan those pages, email them back to us, or post them. Just a reminder on setup fees. The setup fee is $2,200, and just reminding you all that we do a lot more than the cheap online companies. So we set up the company, which costs us out of pocket $538. We get the ABN and the TFN, which we normally charge $264. We set up all the trust paperwork. We make sure you have those binding death nominations. We set up a bank account. We talk to you about your existing insurances and help you with that. And we roll over the funds, and we also provide all guidance and assistance and courses like this, etc. The online firms, basically all they do is set up the trust, and you have to do everything else yourself. And I've had a lot of people come to me. They've tried to use the cheap online companies, and then they've come back to me and just said, oh, it's way too hard. Can you guys just take it over for us? The ongoing fees is around about 1%. We do have a minimum of 1,650 for funds under 300, and then it's capped at 3,300 once you go over the 300,000. People ask us what we do for that. We actually do a lot. It may not seem it, but when you first see the packet of work we do for you, we do financial statements, tax returns, member statements, contribution reports, minutes for everything that needs a minute. That's important. We arrange the audit. We lodge everything with the tax department. Basically, we do everything that you need to be compliant with the law. And we try and be proactive about it. So we've got deadlines coming up. For any of you that set up an SMSF a little while ago, we've got deadline coming up 28th of February for lodgement, but that's only for the funds that were set up in early 2022. So for those of you that are setting up right now, sometimes people come to me after setup and go, okay, when's my audit? It's your accounting, financial statements and audit won't be till after July 2023, and anywhere up to May 2024. So if we're not in contact with you, don't panic. You're on our list. We're just going to come around to you and get it done before July 24. So So just on the fees again, keep in mind, I just like to remind people about the fees. With the fee for the SMSF, yeah, it's in your face. It's there. It's an invoice you have to pay. So then people start to freak out and go, oh, SMSF's really expensive. So I just want to remind people that the funds out on the market, your previous funds, were charging you between 1% to 2%. And if you have a financial planner, they would have been charging you another 1% to 1.5%. So for example, a $300,000 fund with an SMSF, it'll cost you the $3,300 plus the audit and the ASIC fees. It's going to be around $3,800. But a fund out there on the market could cost you anywhere between $3,000 to $10,500. So in a nutshell, an SMSF can be very economical if your balance is over $200,000 to $300,000. And bearing in mind that you can have multiple members in an SMSF, so as you build the balance, the SMSF becomes cheaper for you, not more expensive. Whereas when you build your super with the other funds, they charge their percentage and they just keep charging it. So the more you have, the more they make. So just an additional cost to be aware of. If you have an additional rollover, we do charge an extra $220. Our setup fee allows for 2 rollovers. If there are additional rollovers, you can actually do them yourself quite easily. Once the fund is set up and the bank account's set up and everything's ready, it's quite easy just to fill in the piece of paper for your other fund and roll over again or more or a different fund. But if you want us to do it, fine, we'll do it. It's $220. Some people ask the $3,300 fee. Are there 2 lots of fees if there's 2 members? No, just 1 fee. So that's why an SMSF becomes more economical with additional members. Can you add an additional member after the SMSF has been set up? Yes, you can. It's an absolute pain in the ass. Excuse my language. We charge an additional $550 for that. We probably should charge a lot more. There's a lot of work doing it. So we do, if you're in the process about to order an SMSF, decide who you want in it before you order it. We've had a lot of cases of people ordering it and then, our team's got it all set up and then they go, oh, I'd add this person, add this person, add this. It's like, no, get it right from the beginning because it's going to cost you dearly if you add people a little bit later. All the fees come out of the SMSF bank account, not out of your own pocket. The annual fees for the audit and the audit and the financial statements, we are going to contact clients and get that set up monthly. At the moment, it will be annually for if you're doing your first year. But for those clients that their first year will be 2024 financial year, we're going to put people on a monthly payment system. Okay, once you get to the rollover stage. So it's up to you how much you roll over out of your previous fund. A lot of people just roll it all over and close their other fund. Other people, we'll talk about insurances in a moment, but other people leave it open for the insurance. Some people decide to only roll half of it over. Just see how the SMSF goes before they roll it all over. All of that is fine. We will send you an email just before rollover. So right towards the end of the process, we'll send you an email saying, what are your instructions? And we don't do anything until you respond and give us your exact instructions. Once you make that decision as to how much to roll over, if you later want to roll out more, yes, you'll be charged the extra $220. So, decide what you want at the time because that's what we're going to act on. So about the insurance, which I mentioned, we keep 6,001 in the current super fund to keep your insurances active if that's what you want to do. How long does that 6,000 last? I don't know because it varies from fund to fund to fund, usually 2 years. You'll need to keep an eye on that fund and make sure the insurances are protected. We're not going to be looking after your other fund. Having said that, the funds are very good these days. They don't go and cancel your insurances willy-nilly. I got a letter from one of my funds that I've got open just for insurances, and they gave me 18 months notice that if I needed to make a contribution, so plenty of notice. Insurance is available after the SMSF has been set up. The SMSF can take over all the insurances. That's not a problem, but insurance for anyone who's dealt with it, particularly medical, death and life and income protection, it can be quite a process. So we'll refer you to a financial planner to talk about your insurances. Banking, we get asked why we recommend Macquarie Bank. For no reason other than they work really well with our accounting systems. So, and they also allow us to establish the bank account for you, which saves a lot of time. But you don't have to have Macquarie. You can choose a different bank. You'll just need to let us know that you want to use a different bank, and we'll send you the trust deed. You'll have to go to the bank. You'll have to do all that side of the process to get the bank account open. That will normally delay the setup process because we've got just quite a good system setting up the bank account. We know exactly when to do it, etc., etc. So if you do your own bank account, it could cause a delay, but it's entirely up to you. When will you know your bank account is open? You'll receive a welcome email from Macquarie Bank. If we've told you, you should have received it by now. You check your junk mail. If you're having trouble with Macquarie Bank, you need to call them directly. It's really important from our perspective, from compliance, from tax office, that we are very separate from Macquarie. We cannot access your Macquarie Bank account. We can't tell Macquarie to do anything. You have to do it yourself. Can we access the Macquarie account? No, we can't access your funds. We can see the account. So we are able to tell you, when the rollover's in and things like that, but we cannot transact. We can, if someone's stuck and really needs a transaction done, we can instigate it. So we can hop onto your Macquarie Bank and set up a transfer. Then you get a code to your phone. So we can't do anything without you tapping on yes on your phone. So we can't move any money without your direct permission. Also important to know while I'm on that subject, if there's multiple members in the SMSF, we set up the Macquarie Bank with all to sign. What that means is every transaction is going to require every member to click yes on their phone to say that transaction's approved. That's important again for security, because sometimes we're setting these funds up with non-related parties like friends, brothers. We've got brothers that really don't trust each other. So both brothers have to authorize the transactions. If that's a pain in the butt for you, which it can be, you certainly can contact Macquarie and make it just one to sign, because quite often in a couple, one person is the one that does all this sort of stuff, so they just want to be the one authorizing the transactions. That's fine. You just contact Macquarie. Do you need to keep the bank account open? Yes. You need at least one bank account open for the SMSF. It doesn't have to be Macquarie. So some people, we've set up the Macquarie account, we've done all the rollovers and everything, but then when they've got time, they go and set it up with their local friendly business banker. That's fine. But you've got to have one bank account open. So you've got to be paying fees and lots of ins and outs in the SMSF. If you go to a different bank, it's just going to delay things a little bit more at tax time, because you'll have to give us all the bank statements. We don't need it for Macquarie because we get the data feed, but we don't. That's the only bank we get the data feed from. Yeah, so please keep money in the bank for the setup and ongoing fees. That's not just for our perspective so that we get paid. The tax office also have an issue with people who have rolled over all their money and then just ripped it out, closed the bank account, because the tax office knows you need to be paying an accountant somewhere to be doing it. So they're very, very suspicious of funds that have closed their bank account. All right, so on the technical side of things, when we get to contributions, once we've set up the bank account for you, you can go to your employer and ask them to change your contribution so that it now goes to the Macquarie bank account. You have to contact the employer. We can't do it for you. And every employer's got a different process, different paperwork, but it's not difficult. This is the information you'll need to give to the employer. Don't worry about writing this down. We'll send you an email at the end that tells you this. You need to give them the ATO regulated fund employer notification, which we will send to you. You also need to tell them the super fund name. This may sound silly, but we have had clients come back to us and say, what's my super fund called? It's whatever you chose on that order form, and it's on the trust deed, and it's on all the other paperwork. I just say these things because it really helps us if we don't get time wasting on really, really simple questions. The super fund bank account is the Macquarie bank account we've set up for you. This is one you won't know. Electronic Service Address, ESA, is BGL 360. So once again, we'll send this out to you at the end of the process. If you call Macquarie Bank and they try and tell you it's something different, please ignore Macquarie Bank. They just get that a little bit wrong. The system we use is BGL 360. That's the code you need to use. The address, if you've got the company trustee, it's our address because that's technically where the company lives. You can also just use your own address. It doesn't really matter at this stage. Your member number is anything. So it's just number 1, number 2, number 3, number 4. Just pick, you know, husband takes number 1, wife number 2, or vice versa. Just pick whatever number you want and just stick to that number from now on. That's your member number. You might get asked for a USI. You don't have one. You just leave that blank. Contribution limits are really important just to have in the back of your mind. I refer to the tax office website on this because it's a good website. Believe it or not, it actually is quite easy to read. And it's good to refer to it because these limits change quite regularly. But at the moment, the concessional contribution limit is $27,500 per annum per person. It's tax deductible. So, but it also includes your super guarantee. So let's say, for example, you're on wages, you're earning 100,000, your employer's currently paying 10.5% required by law. So they're paying 10,500 for you. So you could, if you want, contribute 17,500. Tax deductible against your income or your business profit. So the break-even point to make it viable is generally if you're earning above 80 to 90,000. It could be worthwhile if you've got spare money to put the money into the super, claim the tax deduction. It's taxable in the super fund, but you get the tax deduction. It's still very worthwhile you doing it. A lot of people don't know there's also what we call a non-concessional contribution limit. So this is separate to the 27,500. It's on top. You can actually put in 110,000 per person per year. So then there are many other limits as well, which I'm going to run through. I don't expect you to remember this or understand. It's just more important for you to know that there are ways of getting a lot more money into super. If you've got spare money, if you're close to retirement, you've sold a house, you've won the lotto, whatever it is, you can get more money into super. So there's a 3-year bring forward rule where you can put 330,000 per member. There's a 5-year catch-up provision where you can use the 27,500 limit 5 times. So you can put quite a large lump sum in, all tax deductible. So that one, keep in mind if you've got a capital gain, so sell an investment property or a business or of shares, you can use this to eliminate the gain. And these are all sorts of things the accounting team can help you with when the time comes. There's a downsizer provision if you're over 60 and you sell your home. There's a lot of small business exemption. You can literally get $500,000 in per person and more with the small business exemption if you sell a business. There's others as well that come and go. The government love playing with super rules every budget, so every now and then they announce other ways. So putting it simply, if you've got money that you want to get into the super fund, talk to the accountants at the time. Withdrawing money, the exciting bit, but please don't do it for personal use. That is the ATO #1 area that they will come down on you really, really hard. Please don't do it. Basically, when it comes to withdrawing money, the same rules that apply to all super apply to the SMSF. That is, for example, there are some ways of getting money out of super for extreme financial hardship, medical, terminal illness, etc. And for example, the COVID provisions, when they allowed people to take money out during COVID. If they announce a rule about superannuation withdrawal, same rule applies to the SMSF. The only difference is, instead of going through a really convoluted process with another fund, you're literally providing paperwork to yourself to prove that you're entitled to take that money. But you do need to meet the rules. You can't just decide yourself that, yeah, you're in financial hardship. You need to research the rules or talk to us and then prove that you meet that rule, because the auditor will check it. So pensions, once you're eligible, which is basically over age 60 and retired, really, really easy in the SMSF. One of the benefits of SMSF, you don't have to apply to the external fund and fill in a whole complicated piece of paperwork and wait for months. You simply hop onto the Macquarie Bank and pay yourself. Weekly, monthly, annually, whatever you choose. Or just draw out whatever you want. Some people don't want a regular weekly or monthly payment. They just want to hop on and draw out 1,000 here, 2,000 here, whatever they want. Because there's a minimum that you need to withdraw if you want to be in a pension, but there's no maximum. So as long as you meet the minimum, which is, to give you an example, at age 60 to 65, you must draw 2%. But you can draw however as much as you like, as long as it's more than 2%. We do recommend you draw a pension when you turn age 60. Even if you don't really need the money, we suggest you take the money anyway, because it puts the super fund into what we call a tax-free mode. So everything going forward, all the income on that in the super fund, tax-free. So let's say you bought a whole lot of gold, you make a really big gain on it in the super fund, tax-free. So really good idea to draw that pension. And once again, the accountants will talk to you about this sort of thing when you get to that age. Some people have come to me and said, well, I'm 60 now, I'm just going to pull everything out of super. That's not recommended. Once again, it's all tax-free. So if you pull all your money out of super and then you, say, buy gold in your own name, make a really big gain, that's all taxable. Better to leave it in super and have it tax-free. So this is the most important document of all that comes during the setup process. It's called the Self-Managed Super Fund Trustee Declaration. And what it is, the tax office want to know that you've read this. So do read it. Of all the documents that come to you, read this one. It is written in quite plain English, but just to make it even easier for you, in case you don't want to read it, I'm going to tell you the basic concepts that you need to be aware of. They're mostly common sense. The investments must be for the sole purpose of your retirement, no personal use. The trustee duties are to act honestly with care and diligence and act in the best interest of the members. Of course you're going to. You're acting for yourself. Keep assets separate from personal money. What I mean by that is we've had the occasional slip up where a trustee has gone and set up a bank account or a crypto account or a gold account in their own personal name and then use the super fund money. No, you've got to have everything in the name of the SMSF so that there is no blurring between the SMSF and you personally. You need to protect the assets. Obviously, it's your money, you're going to. I mean, that just means simple things like if it is gold and silver, you've got it in a safe. If it's property, you've got insurance. All the basic things. You must allow all members access to all information. That's important for people if you've set up with other people. Everyone's going to see everything. So don't go setting up with people that you don't want them to see your information, because they will. There's an investment strategy document which we will give you when the time comes. We're looking at doing a project and getting all that out to people shortly. We get a lot of people asking about this. It's just an investment strategy. What that means is you just document what you're planning to invest in. The tax office asks about this. Do you have an investment strategy? If any of you have a discussion phone call with the tax department as said during the setup, you say, yes, I do. I'm going to do an investment strategy. And if you want to invest all in gold, that's fine, as long as your investment strategy says I'm going to invest all in gold. So to give you an example, we give you a table like this that sets out what your asset allocation is. That's a technical term for, well, how much are you investing in what? So in this table, for example, it's got equities, property, etc. If you were doing gold, we would just get you to change that, say gold, 100%, cash at bank, the rest of it. You can be quite broad with those percentages, and then every year the auditor is going to just check that what you've invested in matches this strategy. If it doesn't, it's no big deal. We can fix the strategy. It doesn't mean you have to change your investments. It just means we need to change the document. Okay, the main investment restrictions the tax department want you to understand is that you cannot, in any circumstances, lend money to a related party and yourself. You can't acquire assets from a related party and yourself. So I get asked, can I buy the house off myself and my house? No, you can't. Can I buy gold off myself? No, you can't. You just can't. You just don't do it. An SMSF can't borrow money except for the property rules where you can borrow to buy property. You can't invest in a related party business. So, for example, my super fund investing in my businesses. We can up to 5% of your total super balance, but it's really messy. For the sake of a 5% investment, I suggest it's not even worth doing. You can't enter into non-commercial arrangements. So everything with the SMSF basically has to be above board. No shonky dealings, no under the table, no handshakes. It's got to be a commercial arrangement that you would do with a non-related party on the open market. So going in with other people, a lot of people do ask about what happens when one member retires. That's all fine, because it doesn't mean that just because one's retired, they've got to leave the super fund. No, each member has got their own account within the SMSF. So that member will simply start drawing down on their balance. The only tricky bit is if you've got gold or property, gold, silver or property, if you don't have the money to be paying them the pension, you might have to sell down some gold or sell down the property. Administration, you need to keep records for 10 years. You need to ensure the financial statements and tax returns prepared every year. I've got WFS will arrange that for you, but actually it's going to be FFS. We've taken over all the accounting now, which is a bit of a change to our arrangements. So our team will be looking after you going forward forever, which is cool. Okay, but you'll be on our list. If you've set up through us, you'll be on our list. We will just get to you when the time comes. No need to contact us and remind us. You'll be on our list. But yeah, if you don't hear from us by about February 2024, you might want to give us a call. All right, just keep all the receipts and invoices and send them through to FFS when the time comes. Number one thing I want you all to know, if you change address, please let us know. Firstly, you're required to, by law, to let the tax office know, but we'll do it for you. Just let us know, because as much as I say that we will do the financial statements and tax returns for you, if we can't find you, we can't do it. So let us know where you are. If you change email address, phone number, please just let us know. The biggest issue is that the penalties for being non-compliant is 50% of your fund. So say, for example, you've got $200,000, the penalty could be $100,000. I've only ever seen that applied twice in the 20 years that I've been doing SMSF. Yeah, one was just for a really bad mistake, and the other was for a really non-compliant fund. So it doesn't happen very often at all. Normally what happens if you are a little bit non-compliant, like maybe you haven't kept the receipts, or maybe you've invested in something that tax office don't want you to, they're normally very lenient. They'll normally work with you to say, okay, let's rectify this mistake over the next year or two. Okay, but yeah, just keep compliant, ask questions. If you're unsure about anything, ask the question before going ahead and doing anything. If you really want to know a lot, there is an SMSF approved trustee course, which is free. You can just Google SMSF Trustee course, or that's the link there, education.springfg.com.au. It's very, very, very complicated course. But if you really want to know a lot about it, or if you want to be an accountant, perhaps have a look at that course. Okay, so that's all for me. I'm going to stop the recording now and just open up for questions if anyone wants to put their camera on. But otherwise, thanks for listening.